Asian markets are down this morning by around 1%. The moves are driven by US CPI data that showed prices rose 0.5% in January, more than the expectation of 0.4%. Policymakers sounded hawkish post this data, and they now expect to do more to fight inflation, and rate increases could last for longer period than previously anticipated. Money market traders in the US are also betting on at least two more 25 basis points rate hikes this year, with interest rates seen peaking at 5.28% by July. I will now invite the technical team to take the call forward.
Yes, thank you, Jihan. Good morning, all of you. This is Swati. Yesterday, we have seen a very good bounce back rally into the Nifty from almost 17,800 to 17,950 levels. Nifty has managed positive closing about the same level, which gives some sort of a relief sign. Now, looking towards the Asian markets are really just trading at a flattish to negative note, and we're likely to open with a little bit of a gap down opening, or say the negative opening, and we might witness some profit booking as Nifty will face the strong resistance level at 17,900 levels. Any move about that level on the closing basis will only extend this pullback rally towards 18,000, 18,100 levels. Now, at the current level, the immediate support is placed at 17,870. Any move below that will extend this fall towards 17,800, 17,740 levels on the downsides. Coming towards the Bank Nifty, for today intraday purpose, the immediate support is placed at 41,600. Below that level, 41,400 and 41,000 levels can be seen on the downside. Whereas on higher levels, 41,900, 42,100 are the resistance levels we need to keep eye on it. Coming towards the Nifty Finance, 18,670, 18,740 are the resistance level. On the flip side, 18,470, 18,350 are the crucial supports level. The overall view will remain cautious itself as long as Nifty trades below 18,000 levels. The levels which are continuously emphasizing from the last few trading sessions, as Nifty has got stuck within the range of 17,700 to 18,000. Within the 300 points, we are witnessing a sideways momentum into the Nifty. So the view will be the cautious, but definitely it's a stock specific market, because on daily basis we are witnessing a sectorial rotational into the market. So one should be a stock specific with the strict stop losses. As I said, it's a stock specific market. One should keep an eye on APL Apollo. Yesterday we have initiated a buy call in this particular counter. Daily chart indicates a very positive strength on the technical front, trading in the upward direction, well placed above all the important moving averages. We believe that it's likely to touch the feet of 1285, 1290 levels on the higher side. So one can take a buy call at the current market price as well, with a stop loss of 1180 for a target of 1285. That's it from my end. I request Amit to take a call forward.
Yeah, thank you, madam. Good morning, everyone. So on the derivatives data front, as you have seen that yesterday market pulled up sharply. From the last 4 to 5 trading session, we were seeing that the data which was getting formed on the derivative front was on the negative bias. While on the Monday closing, also the negative sentiments have been created in the market, and completely as per the OI position, also the data, the strikes got shifted, and the supportive levels also got shifted on the lower end. But due to yesterday Fin Nifty expiry, we have seen that the pullback rally has been witnessed in the market. But currently, that is not also giving confirmation yet, because the OI portions which you are seeing right now from the yesterday pullback also, still it's showing a negative sentiment only, because at 18,000 and 17,900 strike, we are seeing that the OI portions are getting added up continuously on the monthly basis. While on the yesterday session, we are seeing that some sort of OI got liquidated at 18,000 strike, but still we are seeing that the portions are not getting shifted on the higher end very sharply. So currently in today's session also, once if Nifty again breaks 17,800 level, while on a monthly basis we are seeing that the OI support of the put writer got shifted towards the 17,800 level from 17,500 level. So 17,800 level, once if Nifty breaks that level in today's session, or tomorrow's session, then we might expect some sell-off to be heavier in the market. So currently, the view would be the range-bound level, but we might see some profit booking from the upper levels. From once if Nifty goes about 18,000 level and gives closing on the weekly basis about that level, then only the scenario might change towards a positive sentiment. But currently, we expect some strength to be negative in the market, while PCRY yesterday gave close at 1.16 level. So it gave close towards the resistance zone, while the PCR resistance for PCR is at 1.15 level, and it completely exactly gave closing at that level. So we might again see in today's session that PCR might drag down sharply towards the 0.98 to 0.95 level in today's trading session. So currently hold a long position with the support of 17,800 level. Once if it breaks that level, then long position should be exited in the market and new shorts to be created towards 17,600 to 17,500 level on the Nifty front. While on the stock specific, we expect stocks like Apollo Hospital to show some positive strength in today's trading session. While in yesterday's session, we have seen the buying we was witnessed from the banking, IT, and metal sector. So we expect some sort of buying from that sector, but a selective selling might be witnessed from IGL, Bajaj Auto, MFSL, and BHEL. These four counter looks negative in today's trading session. So that's it from the derivative front. Thank you.
Arman Financial Services result has improved because of strong disbursement and AUM growth and stable asset quality. Operational parameters were stable quarter on quarter. AUM grew by 57% year on year and 14% sequentially to 1,640 crores. As the base is very low, we expect this growth to continue at 40 to 50% for next maybe 1 to 2 years. Net NPA remained low at just 0.2%. Stock is trading at 4 times price to book. So we think there is no scope for further re-rating, but the book value itself can compound at 25%. Company posted ROE of 28-29% this quarter as well. So book value compounding can compound the stock as well. However, in MFI space, we prefer Ujjivan SFB and Fusion Microfinance over other stocks, as these two have re-rating potential as well. Time Technoplast result has improved. Revenue increased 20% year on year. Value-added products increased by 32%, while the established legacy products increased by 17%. EBITDA margin has been stable between 13 to 14% since last few quarters, and profit increased by 14% year on year. Stock is trading at 9 times trailing EPS, which we think is cheap, and there is an expectation of the reorganization scheme where the company will be selling the international business that is expected to be announced before this year end. So overall, we remain positive on Time Technoplast. Thank you.
Good morning. Kitex Garment has posted declined set of numbers for the quarter, majorly due to lower revenue, which declined by 51% QOQ to 68 crores. With this, profitability has also declined and the company has reported losses. PAT came in at a loss of rupees 4 crores versus QOQ of profit of rupees 21 crores. Share is trading at a PE of 11.9 times TTM EPS. Explio Solutions has posted improved set of numbers for the quarter, both on the revenue and the margin front. Revenue grew by 3.1% QOQ to 135 crores. Even EBITDA margins has improved to 23.3% versus QOQ of 22.1%. Stock is trading at 15.6 times TTM EPS. Thank you.
Good morning. Bharat Forge announced its result. The result is marginally above expectation. Revenue came in at 1,952 crores versus an expectation of 1,888 crores, which grew by 5% sequentially and 22% YOY. EBITDA margin came in at 25.3% as against an expectation of 25.3%, which improved by 90 basis points QOQ, driven by a better product mix. In terms of segment-wise performance on the domestic front in the quarter, the company's MHCV production witnessed sequential growth, while the passenger vehicle and LCV sector production declined by around 10% and 14% respectively. Bharat Forge revenues from the PV segment declined in line with industry volumes. Meanwhile, the industrial business continues to display stable performance, with the segment registering flat sequential performance, largely due to seasonality in the agri and tractor segment. Internationally, automotive export revenues have witnessed growth both on the QOQ and YOY basis across commercial and passenger vehicle segments. Going forward, the management expects growth momentum to continue across both the domestic and export markets. Aiding the standalone performance, they expect the new verticals to start registering meaningful contribution at consolidated level and EPS accretive in FY24. The stock is trading at a PE of 26.9 times FY24 EPS. Bosch India announced its result. The result was in line with expectation. Revenue came in at 3,660 crores versus an expectation of 3,683 crores, which was flat sequentially but grew by 18% on a YOY basis. EBITDA margin came in at 11% versus an expectation of 10.4%. The company witnessed flat top line compared to the previous quarter, mainly due to decline in net sales resulting from seasonal impact in the passenger car and tractor sales, which has been offset by higher income from services and other operating revenue. Despite various macroeconomic uncertainties, Bosch will continue on a strong growth trajectory and focus on optimizing its costs to deliver continued profitable growth and cash flows in the future. The stock is trading at a PE of 27.8 times FY24 EPS. Eicher Motor announced its result. The result is marginally below expectation. Revenue came in at 3,721 crores against an expectation of 3,705 crores, which grew by 6% sequentially and 29% on a YOY basis, led by volume growth of 7% sequentially. Realizations declined by 1% sequentially on account of a deteriorating product mix. EBITDA margin came in at 23% versus an expectation of 24.1%. Volume improved by 31% YOY, mainly on the back of a slew of new launches led by Hunter 350. Overall, on the demand front, we expect domestic volume to clock a healthy CAGR of 20% over FY22 to FY25, led by new model launches and a strong model pipeline, along with easing supply chain issues. In terms of new launches, Eicher has recently launched Super Meteor 650, which has received an excellent response from the market. The company also reported an all-time high market share of 8.1% in the domestic motorcycle segment, mainly led by incremental volume from new launches. The share is trading at a PE of 24.9 times FY24 EPS. Thank you.
Good morning. PI Industries Limited reported results which were above expectations. The revenue grew by 19% YOY at rupees 1,613 crore versus the expectation of 1,667 crore. So during the quarter, exports grew by 23% YOY, led by volume growth of 9%, and the 14% increase was on account of price, currency, and the favorable product mix. The domestic business grew by 2% YOY due to adverse weather conditions coupled with higher channel inventory. The EBITDA margin reported at 25.7%, which is ahead of expectation, as well as increased on QOQ and YOY basis. This was largely on account of favorable product mix and operating leverage. The stock is trading at a PE of 32.1 times to FY24 EPS, and the outlook is positive on the stock over the long term. Laopalo RG Limited result was reported okay, and the revenue grew by 16% YOY at rupees 126 crore. This was driven by a volume growth as well as some increase in the price realizations. EBITDA margin reported at 36.5%, which was lower by 3% on YOY basis, largely on account of higher advertising expenses and increase in fixed cost related to the new facility, which is yet to be commissioned. And the stock is trading at a PE of 25 times to FY24 EPS, and the overall outlook is positive over the long term. Thank you.
Yeah, Harshal, you can take over.
Yeah, thank you, Jia. Good morning, everyone. मेरा आवाज नहीं आ रहा? Hello, can you hear me?
Yeah, you are audible.
Uh, yeah, thank you very much. Uh, gold and silver overall likely to correct as we have seen dollar index again bouncing back from the support area. So we expect prices in gold and silver to correct further. So we recommend to sell gold around 56 750 to 800 levels and maintain a stop loss of 57,000. And on downside, we expect 56 450 to 300 levels. Selling is recommended. Similarly, silver also trading week below 67,000. So we expect prices to test 65,500 to 65,000 on lower end. In crude oil, we had witnessed some profit taking, and prices are again expected to test 6650 to 6700. So, buying around 6480 and maintain a stop loss of 6400. Um, all in all, positive for crude. In natural gas, prices are consolidating, but we expect prices to spike up, bounce back, and test 230 to 235 levels. So, buying is recommended, and as we are expiring the nearly expiry expiry is on 21st of Feb. So one can initiate some calls, let's say 220 to 230 calls C, and keep it for the expiry. There could be some pullback, and that could fetch some profits. In metal front, we are seeing some divergence between copper and zinc. In a couple of sessions, we have witnessed copper prices are rising and zinc pricing are correcting, and vice versa. So, in copper 778 seems to be a resistance area. So as far as it is holding below 778, we expect prices to test again 770. So all in all, there could be some range bound movement, but be cautious if crosses and sustains above 780. Zinc prices are expected to test 270. So on 271 can buy and maintain a stop loss of 268, and also one can sell around 276 and keep a stop loss of 278. Similarly, aluminum also, there could be some pullback. 213 is holding on as a support area. So as long as it is sustaining about 213, one can buy for a pullback. But however, 215, 16, there should be some selling pressure. So taking profit is advisable. That's it from me. I'll ask Ria to take over from here.
Thank you, sir. Good morning, everyone. So, in today's session, we have seen USD INR bouncing on the depreciative side at around 82.95 and is testing the highs of 82.97. Still, the pair is finding very difficult to give a breakout to 83 levels. Once it gives a breakout, then only we can confirm a bullish leg. Otherwise, it will again fall towards 82.84, 82.75, or we'll see a consolidated momentum within the levels of 82.98 to 82.86. As far as other pair goes, we are seeing quite a gap down happening. Dollar index has strengthened at around 103.38 after the CPI numbers. If you look at the CPI numbers, it has proven to be sticky and has come at around 6.4. The US inflation has increased by 0.2, and this is indicating that more needs to be done in order to get the inflation below 2%. It's still a very long way. If you look at the GDP numbers which have been published by the euro area, it is up by 0.1%, and the employment is up by 0.4% seasonally in the fourth quarter of 2022. Though it is on the positive side, it is not a very strong number to give a push to the Euro USD, and this is one of the reason why we are seeing such a profit taking happening. For JPY INR, look for a breakdown of 62.45. One can go short into the pair for a target of 62.20, 62 levels with an SL at around 62. 62.65. Same with Euro INR. One can go short into the pair for a target of 88.8 to 88.70 with an SL at around 89.25. For GBP INR also, one can go short. I think there could be a profit taking that could happen. So it could test 100.50 in today's session. You can keep an SL at around 101. So that's all on the currency front. Thank you.